We had the market starting positive this morning, but we seem to have lost a bit of momentum now after yesterday's strong gains.
Yeah, we had a very strong day on the market yesterday. I think there's a little bit of profit taking coming in. Also a bit of news with Anglo American not going through with the merger. I think that's weighing down on the bourse at the moment. It was down 2% at one stage in early trade today. So I think that resources are holding the market back slightly.
So do you think some corporate action was priced into the Anglo share price, and now a bit of disappointment perhaps that Xstrata is walking away?
I think there's a little bit priced in. I think most people thought that they'd have to offer a very, very big premium for Anglo American. Probably thought that they didn't have enough cash and shares to get that premium. So there's probably a little bit in there. Maybe some speculators waiting to see if there was something happening. But I don't think there was too much speculation. And obviously now they just have to re-weight themselves and prepare that they don't get another aggressive takeover bid for them.
Of course, we know that prior to the financial crisis last year, Xstrata was interested in buying a bigger stake in Lonmin. It already has quite a large stake. Do you think that this could become a play again, that it might take a second bite at Lonmin?
I would definitely look at Lonmin again. One of the reasons why I wanted to have a joint venture and partnership with Anglo American was to get hold of some of those precious metals. So I do think that they can look at Lonmin. Lonmin's traded very strongly over the last 3 weeks, and they'll definitely take a look at that again.
Of course, just looking at the Dow and the JSE, touching key levels yesterday, the JSE crossing 26,000, the Dow crossing 10,000. That's for the first time in a year, and really buoyed by those results from JP Morgan. Of course, this is quite a key week for banks reporting in the United States, as well as some of the big IT plays as well.
Yes, very good results from JP Morgan yesterday. Today we have Goldman Sachs and we have Citibank reporting. Market expecting slightly poor results from Citibank and stellar results from Goldman Sachs. Goldman Sachs have paid all their money back and top money funds back to the Fed, while Citibank still has got a lot of debt on its book and still to repay a lot of that money. So we're looking forward to these banking results over the next few days, and the two today as well. We've got Google later this afternoon, as well as IBM, and we get a very good view from a very big national company like IBM, what their view is going forward. So analysts in the market will be looking to see where IBM sees the next 6 months.
Okay, well, the focus has, of course, switched to the corporate earnings season in the United States, but we are still, of course, getting economic data out. We had retail sales out in the US yesterday, 1.5% shrinkage last month, of course, which was slightly better than expected, but still a shrinkage nevertheless. In the meantime, we've had home foreclosure numbers, and they look pretty bleak. So still some pressure on the jobs market and the housing market in the United States.
Yeah, the unemployment figures are very weak at the moment, coming up to 10%. The Fed says that by the end of 2010, they'll still be at about 9.25% unemployment, so that's worrying. And then the foreclosures numbers that came out yesterday were very weak, and the highest level of foreclosures in many, many years. So the underlying economy is still battling in America, and that's why we see such massive dollar weakness, as countries don't think that the Americans can pull themselves out of the recession as quick as they would like to.
And of course, we did have that dollar trading 150 against the euro, which isn't nearly as bad as the 160 it traded at last year, but still not very good. And it's keeping the rand at these firmer levels as well, which of course must be feeding through to our resources stocks.
Yes, I think the euro trading up to $1.50 to the euro at the moment, and if 154 breaks, it leaves it out to those levels to 164 dollar euro. And obviously very strong rand. We've got 721 as a big resistance level for the rand. If it breaks 721, it goes back down to 7. So putting a lot of pressure on our manufacturing parts of the economy, and we can see from our consumer numbers and retail numbers that came out this morning, down 7%. Our consumers are really battling still, and manufacturers battling immensely as well. So that very strong rand down to 7 will put a bit of pressure on our economy still.
A few other bits and pieces of news on the corporate front in South Africa. We had the trading update from SA Breweries this morning. What was your reaction to that?
More or less in line with what they said. Beer sales were down 1%. However, the other soft drinks were up 1%. So it netted off. And then again, China was up in double digits, so up to about 12% in China, and that is the biggest actually beer market in the world, and a growing beer market. So on the emerging market side, looking really good, growth looks good, but obviously about down 6% in Europe. So the Western economy is underperforming, and emerging markets is a place to be. And I think the whole of SAB's strategy is emerging markets, and I think they're looking good going forward.
Of course, we know sales were down slightly in South Africa, but looking forward to 2010, I should imagine SAB Miller will be one of the companies that does pretty well during the 2010 Soccer World Cup.
Definitely, if the amount of people that are expected to arrive in South Africa, it's 400,000 people, they will boost the sales quite significantly. Obviously, Anheuser Busch being Budweiser is the main sponsor, but obviously in the peripherals they will sell a lot of volumes of beer during that period. But it is only a 2 to 3 week or month period, but it should boost the sales over that period.
Okay, so hundreds of thousands of beer drinkers descending on South Africa. And perhaps taking a look at Old Mutual, we've had quite a bit of news out of Old Mutual this week. They announced a £500 million bond earlier in the week, and of course yesterday announcing that they wanted to buy out minorities in Mutual and Federal. And of course this isn't the first time that they have tried to buy out those M&F minorities.
Yes, they did try earlier. I think they had offered quite a substantial premium the first time. The premium that they offered yesterday was 21% and the share went up 18%. I think they're getting short-term insurance really at a good level while the short-term insurance industry is bottoming out here and at low levels, and they can correct and fix anything that's wrong with Mutual and Federal much easier off away from the market and in their own stable. So I think it's a very good acquisition for them. And obviously with that £500 million bond, there's been a lot of flow into Old Mutual. We'll be trading a few billion every day since that announcement, and people see that it will help them clean up their balance sheet, clean up their problems that they've had in America, and put them on a sound footing. So looking very positive at the moment for Old Mutual.